Hello, beautiful people. Hello, traders. Welcome to our midweek analysis video. This is episode 2, and what we're gonna be looking at, we're gonna be looking at the DXY, GBPUSD, EURUSD, and USDJPY. I also don't intend for this video to be that long, so let me just go ahead and get right into it. So last week, or the weekly forecast that I normally release each and every weekend, I did mention that we are seeing a situation where the buyers are starting to commit. And one of the key indicators that showed me, or that proved to me, that the buyers are starting to commit was the fact that we broke that high at that point. So the reason why that is significant to my trading is the fact that this was the last point of supply. This was the last point of injection where we saw supply coming into the market to break that low. Okay, because if you move to the lower time frames, what you'll notice is that this is a significant low. Just think about it logically. Think about it. You see where we have these you know, this heavy injection of supply. You see these continuation moves, and then once the market reaches at that point, you can see we start to pull back. All right, meaning that there's some level of demand that has come into the market, and then now from there you can see the reaction, or that was the last point where we saw supply coming into the market to break that low. All right, and even though it is not a significant low, because we do have two types of lows, there's a low that breaks some form of a structure. Let me just illustrate that pretty quick. So we have such a low that broke. Sorry, we have such a this is a weak low. But then if this low breaks that high, then this low becomes a significant low. It's more stronger than this one that never achieved anything. So if we see now the market actually breaking a low that achieved something, or a low that broke the high, then we know that the supply that came in at that level is much stronger as compared to this. And that is what I'm saying. This low, even though it wasn't that significant, it still did achieve something. So that was one of the key things that or one of the key indicators for me that showed me that perhaps the buyers are ready to commit to this market. The fact that we broke this point, because this was the last point of supply. So once we broke that, that was a pretty good signal for me that the buyers kind of really and ready to commit to that market. So now if we go to the 1 hour, this was that high. Sorry, let me just go to the daily, and let's just illustrate that. Okay, so if we go to the 1 hour, you will see that this was the high that I'm talking about, okay, on the daily, and this was the high that that got broken into. So now if you are to follow the structures on the 1 hour, we can see that the swing structure, this is where we last broke the swing structure to the downside, and never since we've been in this melt down. So we are following now the internal structure of the 1 hour, and the internal structure of the 1 hour, as you can see, has been bearish. All right, we are continuing to break structures to the downside. So another thing that we saw this week, or one of the other things that we saw happening this week, was the fact that we broke the internal structure to the downside, which means this bearish trend is being maintained, or the sellers are still in control of this market. So how should we trade the DXY in light of all those things that we have discussed? So one of the things that I like, or one of the tools that I use, is the Fibonacci tool, and this tool tells me where the market is retracing to. So as you can see, we are already past we are already past these 61.8, approaching what? Approaching these 1 hourly supply level. So another thing that I do want to, that I would want you to pay attention to is the fact that we have these low resistance liquidity levels, and that would be used, or I'm seeing a situation where that may be used as the inducement for this level. Okay, and the reason for that, just think about it logically. The last many sellers will be looking at these and they are thinking the last time the market was here, you can see the reaction that we got. Okay, so that level, because it's a whole level, may end up being respected once the price comes back into that level. So, but for us, we know that that may be used as inducement, and the real level that we should be looking to trade from is these 1 hourly supply. Okay, 1 hour supply level. So let me just mark this out. So this is the 1 hour internal targeted low, and the trend has been maintained. So our expectation is for that trend to continue to the downside until we are proven otherwise. Now on the daily time frame, even though, and this is where a lot of people get confused, even though I'm saying that the buyers, we are seeing the signs that the buyers are starting to commit. You can see what would have made a lot more sense is if this was a swing high. Okay, if that was a swing high and we see the market actually breaking it, that would have made a lot more sense. And the other thing is that this break right now is just a weak break. If we had a body closure above that high, that would really be a strong signal. All right. So and that is why we use multiple time frames. Okay. Until these changes, until we break this internal protected high, we still or we are going to continue looking for those sell opportunities. So for now, all we can just do is just to wait for the market to come into these highs. All right, to come into this supply level, this 1 hour supply level, take out those highs, and then trade from this 1 hourly supply level. So this should be it. Let me just indicate that. That is how we should be looking to trade that the DXY. All right, until we are proven otherwise. If the market just comes and blasts through this 1 hour internal protected high, then the trend has changed, and then we'll be looking for those you know to trade to the upside. But for now, everything is clear. I don't want to make it complicated. Just we should follow this internal trend. Let's go to the Euro USD. Let's just start with the daily, and this is what we are having. Same thing. We just hide that. And also hide this. So same thing with the DXY, as you can see. Although we had already marked this out as a potential supply level. Let me just mark that. We had already marked that as a potential supply level. And I did mention that we may see some reaction from that level. So what has the market achieved so far? So the one thing that I do want to mention is the fact that this level broke, which meant that there are no supply. The fact that we broke, even with just a week, for me, that is a signal that that is a weak zone and we shouldn't be looking to trade from that zone. And even though, yes, we are getting this reaction from that zone, it doesn't mean a thing to me. It just tells me that that is just a weak zone, and the true zone is the one that is sitting above it. It could be this one, it could be, it could be any other zone, but this one we shouldn't be looking to trade from that, and that is why I delete them as soon as they get broken. I don't look to trade from those zones. So right now, what we can see is the fact that we are maintaining this bullish trend to the upside. The fractal structure is being maintained, and remember on the daily time frame of the Euro USD, we are following this fractal structure because the internal structure is not well defined, or the internal structure is at par or is at the same levels with what we have as the swing structure. So we have no choice but to follow the fractal structures. And right now, as you can see, the fractal structure is quite bullish. We broke structure to the upside. All right, we broke structure to the upside. That is where we broke structure to the upside. And remember, the fractal, the when we are mapping out the fractal structure, we don't want to, if we can get the body the body break, that's fine. But we are also fine with the weak break. So right now, as you can see, price broke structure, the fractal structure to the upside. And remember what I always say: once we broke the structure, what you can always expect is a pullback. All right, and this is what we are getting. We are coming into some of these demand levels at that particular. We are coming into this demand level. Let's just mark that out. So that is the classical order block. So that is the classical order block. But of course, we will go to the 1 hour to refine this zone. Let's just do that. So coming into that zone, and then from there we can get the continuation move to the upside. All right. So from here, we can expect such a move to the upside. So if we move to the daily, we do have several defined zones. So we have these. So this is the 1 hour. So we have several zones. This is the first zone, and this is the second zone. So let me just deactivate that. Okay. So we have several zones that we are looking to trade from. As long as I'm gonna keep on repeating this. So that is the fractal. Uh, let's just deactivate that. So as you can see, what we achieved with the 1 hour structure is the swing. We saw the swing break of structure to the upside, and once we broke that structure to the upside, the next thing that we should be expecting to put is the a swing low. Okay, that is what we are expecting to get formed, and what we are trying to catch is the bottom where we do form that low. And as you can see, the market came all the way to these to test out this demand level, and you can see the reaction that we got from there. Even though we never that continuation move from this zone never happened or never materialized, we can see the market came to retest that. But at the same time, I do want you to pay attention to this liquidity that has been already formed. All right, so that may act as inducement for this level or for this extreme level. So we do have another level that I haven't drawn, and that is that. Okay, so that is the 1 hour. That is the 1 hour level. So we do have those two levels. Also, I do want to point out that I did suffer a loss, and I'm gonna go over that in a couple of minutes. But just and I will keep on emphasizing this until you get it. This is what I trade. At this particular moment, this is what I'm waiting to get from this low. That is what I'm trying to catch. And I know that it's not advisable, but with these demand levels, you can anticipate for where that low will get formed. So for now, this is that level that I'm looking for that low to get formed. If that gets violated, then I'm looking at that level. Let me just go over that trade that I did mention, that I took a loss. So that was it. So as you can see, we broke structure to the upside there, and then we started this pullback. Actually, there were two trades that I missed in regards now to Euro USD. One of the trades was right here where the market came in, and this was an order that I had left a while ago, I think last week. Um, and then the market just or price came in, activated, and then we saw that reaction to the upside, but I got out at this particular level. If I can just show you on my paper stone, I think they don't show that, but I got activated with this candle, and then I exited manually right around that level. It's just a small profit. So let's just go over this trade idea where it took a loss today. So the reason or the reasoning behind that was based on the 5 minutes structure. So what we are seeing is the fact that let me just explain it with the 1 hour, and then we can go to the 5 minutes. So what we are seeing is the market came in to the 61.8% level. And then from that level, you can see the reaction that we got. So that was one of the confluences. So the other confluence was the fact that we are trading from a premium demand level. So that was the second confluence. So once we tap into that demand zone, all I'm waiting for is just to go to the 15 minutes. So 15 minutes or the 5 minutes, and look for my entry criteria or my entry model. So we tapped into the zone. This was the last point of supply before tapping into that zone, and that was where I was waiting for the change of character. So the change of character happens, and then what do we have? We have this zone to trade from. So we have that zone to trade from. So what I'm seeing, or let me just do that. So we have that zone that we are looking now to trade from. So we have this as the decisional zone, and this one as the extreme zone, the 1 hour zone. Okay, so we have those two zones, and this is the refined 5 minute zone. And I think I can just show you that. So this is the refined 5 minute zone. And also the fact that we do have that liquidity being created there, it just means that it just gives a lot more weight to this zone. So I'm looking at all of those factors, and I'm like, okay, the market is really trying or starting to commit. So what else can we see? We do create another inducement level. So right now I'm looking at two scenarios where this may be used as the inducement for this zone, and also this may also be used as inducement. And I indicated that, and I sent it out to my group. I told them that this is more of a risky setup. Okay, this is more of a risky setup. I wouldn't advise that you get in, but if for some reason you want to get in, this is where, or this is the level that I'm gonna be getting in. So once we came in, tap into that level, all I was just waiting for is to see the market actually committing. All right. So I remember I did send that setup right around when the market was right around that level. And I was looking at these highs, and I'm like, okay, are the buyers really committing to this market? And one of the ways that tells me that the buyers are committing is the fact that, or would be for me to see a continuation of the break, a continuation of break of structures to the upside. Okay. So once we broke above that, then that was just a signal for me to put a buy limit, and I put a buy limit there. And I also mentioned, or I also told my guys, just this is another level that I'd be looking, to trade from. So I put a buy limit there with my stop loss just above that and targeting just a 3R. Then you can see we did have a lot of consolidation right around that level. And then finally, you can see what we got. We got stopped out. So right now, the way that I would trade these, or the way that I'm looking at Euro USD at this particular moment, especially given the confluence of the DXY or the setups that we are seeing at the DXY, I will be very, very patient and wait to see the market taking out these liquidity levels. Also, with the Euro USD, I'd be patient and wait for the market to take out that liquidity. And then from there, we can look to trade from this level. This is the level that I'm looking at. We can look to trade from that level. And if that doesn't work out, if that doesn't work out, then this is the level that we are looking to trade from. So right now, if you can just catch those shots and let's just wait for the market to pull back into these supply level. Let's just mark it out. That is where we should be looking to take our trades from. Okay. And also we do have these buy to sell weeks. They also do form some good supply levels. So let's just wait to see if the market pulls back into that level. If we do get a pullback into that level, then we are looking to trade the fractal structure, which is bearish. So the way that I would trade this, I would wait for that and then continuation to the downside. Okay. That is how I'm looking to trade EURUSD at the moment. So GBPUSD, I don't like it. I don't like the fact that we don't have good structure in terms of okay, the internal, as you can see, is bullish. We did break that structure to the upside. Right now, as you can see, we are just consolidating, I would say. Like I don't see the buyers are really not committing um like um like I would love them to. And also now the fractal structure, like with the GBPUSD, I don't have any structure to trade from. I don't have any structure to trade from in terms of the fractal structure, because now the fractal structure is the lowest and the least and the most aggressive structure that I trade. And right now, as you can see, this is the fractal low. Okay, this is the fractal low, and this is where we broke the fractal structure to the downside. And then immediately after that, you can see this is where we had that fractal high. So meaning, okay, I hadn't seen that. Oh wow, I wasn't paying attention. But that this is where we broke structure to the downside, and that is the change of character. That is a change of character. So yeah, we can actually trade the fractal structure. So once we got that change of character, then we are looking at that as the fractal protected high. So let's just mark that. So that is the fractal protected high. So that is the fractal protected high, and we have the fractal targeted low. So yeah, that is it. So we have the fractal targeted low and the fractal protected high. The way that I would trade these, to be really honest, GBP USD, it's kind of tricky to trade at the moment, especially given even the structure, the way it has been formed for me doesn't look that clean as compared to Euro USD, where we do have some really good structure. Okay. we have some clean structure to trade from, but with GBPUSD at the moment, um, not that clean for me. I wouldn't take any trade in regards now to GBPUSD. Okay, I wouldn't take any trade. But as you can see, GBPUSD, at least in terms of the daily, nothing much has changed. We are just waiting for this fractal low to get broken. Once we break that, then we know that the internal retracement has begun. But at the moment, I'm staying out of GBP USD. I don't see anything clean. It doesn't present me as the most, the most ideal pair at the moment to trade, especially given these two currencies. Okay, let's look at USD JPY. Yesterday, I did catch a very clean trade in USD JPY. Then again, you can see we got stopped out, but I'm happy to say that I was already at break even, right? And I'm gonna be going over that trade in just a few. So let's just look at the 1 hour. There's no point of us going into the daily. If you want to see my breakdown on the daily, just go ahead and watch that, the weekly video. Okay. But one thing that I do want to mention is that the one way we can know that the buyers are starting to commit is if we get that the fractal protected high to break. Even if it's just a weak break, that tells me that the buyers are starting to commit and that the trend or the internal, oh sorry, the trend, the swing trend, the swing pullback has already begun. Okay. Of course, this would be the most ideal high to get taken out for us to confirm that truly the swing pullback has begun. But even with this, the fractal, if we get that to break, or if the price breaks that, then I'm happy. Take or that would be a signal for me to know that the buyers are committing in this market. So let's just go to the 1 hour. And this is what we are having. The 1 hour, as you can see, we are maintaining that bullish, or the bullish structures is being respected. This is where we broke structure. Again, we have broken that structure. And right now, I'm glad to see that at least we do have an internal break of structure to the upside. So right now we do have a predefined, or sorry, we do have a defined internal structure on USDJPY. So how do we trade this? We broke structure to the upside. The way we trade that is we just wait to see this fractal low get taken out for us to trade now the pullbacks. Once we do pull back into an area of value, then we can continue buying from that. So what are the demand levels that we are having? And don't guys, don't be like me. Um, I try to catch both ends of the trade. So we do have that, and even though it has already been mitigated, at least let us see let us see price actually pulling back all the way to the mean threshold of that. And this is where we go to the 15 minutes time frame to kind of refine that. So we do have these two levels. We do have that as the decisional level, and then we do have that as the extreme. But if we are to refine that further, that would make that is the order block, or the demand zone. Let's just mark that as the 15 minutes, and also that is what, the 15 minutes. So if we can just go back to the 1 hour. So the way that I would trade, because I'm looking to trade now the internal structure, I'm looking to see the market actually breaking below that, and that would confirm to me that you know the pullback has already begun. Okay, I'm just waiting to see that break. Once we get that break of structure, Then we are waiting for a pullback and then sell into some of those levels that we've identified on the 15 minutes. Okay, on the 15 minutes, and then after that, that is how I would actually trade that market. So don't worry about what I've indicated here as inducement, and also we do have another inducement. This is just my entry criteria because I need to see a level of inducement being created, and after we create that inducement, take out, that is my signal to enter. So let's just go back to the 1 hour. So that is basically it. That is how I'm looking to trade that market. So let me just go over that trade idea that I broke even. Where was it? Where was it? Where was it? So these, I think it was right around here. This is where I actually entered that market, and it was really based on the 15 minutes. And I remember we did have a zone, or yeah, we did have a zone that I was looking at. I think I will attach the screenshot here. We did have a zone that I was looking at. I can't remember which one was it. Which one that was, sorry. But yes, we did have a zone that I was looking at. So the market came in, tapped into it, or I was just waiting, or I was just waiting for is for my entry model. And once we took out, because this was now the inducement level, that is where we had that inducement. That was the inducement level. Let's just create that. So that was the inducement level. Once we took out that inducement, all I was just waiting for is for the PBL. I know some of you don't trade what I trade. That may be a bit confusing. So the PBL basically means it's the point before liquidation. So inducement, we do have that inducement. The point before liquidation was the supply or the demand that created that move that went ahead to liquidate those, or to take out these inducement. Okay, so that was the point before liquidation, and I just want to see the interaction that we get, between the sellers and the buyers. So as you can see, the market tapped into our demand level, or the point before liquidation. Once we tap into that, as you can see, the reaction that we are getting. So after it has failed, and by failing I mean a close below that level, then that tells me that the sellers are strong in this market. Now I'm just waiting for is to trade from the demand that has been created. Sorry, the supply that has been created. Okay, so I was just waiting for, or what I did is just place my order right there, and I was targeting all the way to the downside. Okay, I was targeting all the way to the downside, and I don't know which candle activated me. Let's just look at that. So as you can see, this was the candle that activated me, or that got me into the trade, and it was yeah, I was looking at I was looking at these from the 1 hour. It got activated by this candle, this one right there, this bullish. That is the one that got me into the trade. And then now from there, it was just a beautiful meltdown to the downside. Then again, market reacted from this demand level, and then from there you can see what ended up happening. But once I was following it using the 15 minutes, and once we maintain that, or once we see the bearish structures getting respected, And by respected, I mean that we are consistently breaking structures to the downside. This was a structure, this was a structure, this was a structure. I just took my stop loss to break even, and that was it. That was it. But then this morning, you can see what happened, and I think that was the BOJ interest rate decision. You can see what happened. The market came all the way to the upside, and then we got that reaction. So right now, I'm just looking at this zone, and I'm looking for my entry criteria to hold. Once that happens, then I'm in this trade, targeting those shorts to some level. Remember, I'm also following the 1 hour internal structure, and the 1 hour internal structure is bullish. So right now, I'm not targeting those crazy targets. I'm just looking for something in and around this level, selling towards this level, or better yet, we can just wait for the market to come and then buy or trade with the dominant trend. So those are two ideas for you. Just wait for the market to come into some of these levels, and then buy with the dominant trend, which is the bullish trend. So yeah, so that is my midweek analysis. I know I've talked a lot, and I know this video has probably gone past the 40-minute mark, but just bear with me. Yeah, just bear with me. And if you found value in this video, please do hit the like button. Also, I would, if you haven't subscribed, go ahead and hit the subscription button, and also turn on the notification bell to get notified every time we make a video. The only way that you guys can support me, or the only way that you can support this channel, is just by liking, by engaging, by subscribing. That helps a lot, keeps us motivated. Anyway, I'll see you for the weekly forecast video, which is in about 2 days. Until then, bye bye.